What's going on, family? This is not financial advice. Do your own research. Man, when it comes to the stocks you choose, man, we're giving out free game for you, man. We're going to be talking about this market, man. Crypto is affected and why we could be seeing this. Could be a real rally. So the VIX is down negative 5.52% on the last trading day of the market. It's coming down to the 200, as you can see. And that could be potential support for the VIX. So we could see a potential rejection off these levels. But with the strong jobs report that came out, over 300,000 jobs recorded in the past 3 months, they could be buying. This could be a buying opportunity for people in this market, man. This could be institutions buying this back temporarily. So I'm looking at a potential VIX spike down to the 20 area. That is strong support, probably the strongest support that they have before the VIX spikes back up. So if the VIX comes down to and breaks through that moving average under the 23 area, it's going to come down to 20. When the VIX spikes down to 20, that will be a huge rally in this market. So I'm looking for a gap fill on this market potentially because of the positive. The market is so negative right now. Everybody's so bearish, but they do have the positive catalyst, the job report, and the rate hike is going to continue to be 75 basis points in this market. So that's at the end of the month. I think it's on the 28th of July. So that will be when the next rate hike take place. They do have some more numbers coming out on the 13th of July. So it's going to be a busy week in this market. So I got a video for you guys, and we're going to be showing you exactly why we could be seeing a huge rally in this market. So let's check this out.
Of this dual health and economic crisis, but set this labor market up for the strongest growth we've seen in generations. When you're posting job gains that are adding over 500,000 jobs per month on average over the past 3 months, you know you're into an historically strong labor market.
And there are a few challenges that remain, though. I mean, wage growth appears to be leveling off, but inflation isn't. Many people's paychecks aren't keeping pace with rising prices. So how is this White House planning to put some downward pressure on prices to alleviate inflation?
The job is to maintain the kind of superlative outcomes like we saw in the job market today. By the way, there are some key sectors: warehousing, transportation, leisure and hospitality, I believe retail trade, where wages are actually surpassing the rate of inflation. So it is something that we need to see, though, much more broadly across the wage scale. And the way to do that is to implement the president's agenda to keep the demand strong, keep the labor market churning, while acting on the supply side. That means in the ports, making sure goods are getting from ship to shelf. That means over the longer term, making sure there's investments. You heard him talk about semiconductors. Infrastructure plan is already in the field. And very importantly, lowering costs for American families, drug costs, the cost of child and elder care, the cost of health insurance premiums. All of that is part of the president's agenda.
Well, let's shift our focus abroad and talk about the economic consequences of Russia's invasion of Ukraine. How is the Biden administration planning to mitigate the fallout on energy prices?
So as you can see here, man, we got the sectors that are doing well and that are going to continue doing well during this time of crisis. But as you know, the GDP numbers have not came out, so we possibly cannot be in a recession yet. But due to the numbers, the economy is strong and it's still growing, so it's still growing. But as you know, production is slowing down as well. So the GDP numbers are pretty much determined if we're in the current recession. But based on these numbers, I don't believe that we are. A lot of people are still bullish, bearish on this market because we have not reached a true bottom yet. So we will know when the true bottom is in based on the technicals on the market, the VIX spiking up, and basically the GDP number, how the market reacts to that. So this is going to be exciting next couple weeks, well, a month actually. So we could see a spike in this market, man. So just pay attention to the VIX, and man, happy trade, man. I'll see you guys tomorrow. Out.